Good morning, everybody. Happy Friday. My name is Gareth Soloway here with Verified Investing, and this is the game plan, all right? So I'm not going to put you through any sort of attempts of me kicking this thing around today at this point, but maybe at the end. We'll see. Follow me over here real quick. Just a reminder, guys, less than a week till this Engelhard bar giveaway, 100 ounces of silver. And again, just all you have to do, it's so simple. Click the follow button on YouTube for Verified Investing and or because you're entered either way, you just get two chances to win if you do both, or follow us on Twitter. And again, that's Verified Investing, invest at Invest Verified on Twitter. All right, we got to get right into it because it's Friday and I want to get to the happy hour action in just a little bit. So what we're going to do here, we're going to take a look at what the keys are for the day. So right off the bat, what do we have here? Nvidia gained $277 billion in market cap yesterday. The company is now valued at $1.9 trillion. Now, again, first of all, there's been no company in the history of the stock market that has gained $277 billion in one single day. That's basically, it added a Bank of America, if not even a little bit more than Bank of America, just by doing what it did yesterday. Somewhat unheard of, somewhat ridiculous, but that's what bubbles are. All right, and again, I'm not going to be shy about calling it a bubble. It is an AI bubble. Bubbles, you don't know when they're going to top out, though, and always we have to remember that, right? So it could be soon, it could be in a month, it could be today, we don't know. One thing I will say on Nvidia that I'm going to be watching for, guys, is this to hit $2 trillion. So that 2T will be a very important technical kind of and psychological level. I think that's around $810 today, if I did my math approximately correctly. So again, watch this. Once it hits $2 trillion, does it start to see some sellers come in? Psychologically, that's the same as if something hits $1,000 a share or something else. Oftentimes, you get a sell-off back down. All right, couple other things to go over. Just some other interesting facts. Nvidia, Broadcom, and AMD, the result of those moves yesterday alone were over 50% of the Nasdaq's gain yesterday. So three companies right there. Next up, NASDAQ had its biggest day in years, up 3% yesterday. And again, the question I have, and this is an interesting one, we're going to look at the charts, the NASDAQ actually did not make a new all-time high yesterday. So it didn't take out the previous high from a few weeks ago. And I think the bigger question for me is, if the NASDAQ can't take out those highs on a day like yesterday, does that speak to underlying weakness in the sector, in the technology sector, where, again, we've talked about this every day here, there's fewer and fewer companies that are pushing up while more and more companies are starting to sell off. All right, a couple other things here, guys. We have to look at the Mag 7 now make up over 33% of the S&P 500. One of the last times this type of concentration was in an index was in 1999 to 2000, just before the dot-com bubble burst. But remember, again, doesn't mean it's happening today or tomorrow. It could still continue up. That's the way bubbles are. We have to look for those key metrics of reversals to give us a clue. And even then, everything is subject to potential failure. It's about putting the probabilities in your favor. All right, couple other things here, guys, as we just go through a few more of these points. What we can see here, oil, guys, is up 10% on the year, hammering on a breakout of $79. Now, it is pulling back a little bit today. We'll look at the chart in just a minute. But the reason why I'm bringing this to your attention is if it breaks 79, it goes to $85 a barrel, right? So I'm going to watch that level like a hawk, most importantly because of its impact on the CPI, the PPI numbers, and what that could mean for the Fed's ability to cut. And we talked about this yesterday in Market Mavericks. I don't know how many of you guys tuned into that show, but the question I have now is, if you see the stock market continuing to go up and you see oil push up and we start to see some inflationary pressures building, is it even possible that later this year the Fed might have to bring a potential rate hike back on the table? Think about that. I don't necessarily know that's going to happen or think it's going to happen, but if we continue to make new highs in the markets, at some point the Fed's going to have to come out here because higher new all-time highs in the markets are inflationary. It just is, guys. Think about this. You just had Nvidia in your portfolio, or you just had other stocks. You look at it after yesterday, holy cow, it just went up a huge amount. Let's say you had $100,000 in there. Now it's $3,000 bigger because the NASDAQ was up 3%. Now you feel like, you know what, I'm going to go out to dinner this weekend to a nice steak dinner, or I'm going to go buy a new TV. That is inflationary because it's demand pressure. And again, if the supply is not there to meet it, prices get forced to the upside. Some stocks in the news here, guys. A couple other things to go over. Square reported earnings. The stock is surging. Now, Now, again, remember, Square has been beaten down for a long period of time. This doesn't shock me. Doesn't mean it's a buy, by the way, but nonetheless, we always talk about how stocks that are pressured into earnings or way off their all-time highs, sometimes they have more probability of going up because expectations are low. And in this case, I think that's exactly what happened. Booking Holdings, right? This is a travel website. Remember, Expedia came out and said there's a little bit of a problem. Maybe some people aren't traveling as much. Maybe the consumer is starting to falter. And again, booking is down. Now, they did say the travel is doing well. There were some other factors here that pushed it down, but the stock is down nicely on the day, dropping, I think it was about 8%, give or take. Lastly, Carvana jumps 30%. Now, this is another one that's been beaten down. They've restructured the company. Their revenue was good. Their earnings were decent as well. But overall, it's looking like maybe they'll survive, so the market is giving them a premium. I think also the 30% move on this is partially short covering. Shorts, massive short amount of people in there. And again, anytime you get a pop, it's going to be a short squeeze to some extent. So interesting to just take note of that. Let's get into some charts right off the bat because we do certainly have a lot to discuss. Look at this, guys. This is that channel on the S&P, or that wedge pattern on the S&P, right? So remember this channel. Look at where yesterday went. And I'm going to zoom in on this because I do want us to pay attention. And I also noticed that I do have the RSI on the screen here. Okay, so we'll talk about the RSI in just a minute. But look at the move yesterday, how we went up, but we tagged this upper line right here, and we stalled out. So yes, it made a new all-time high on the S&P 500, but we still were held within this tightening wedge pattern that's getting tighter and tighter. And as I've said to you, when you have a wedge pattern, remember, basically what you get here is price in it. That's why it forms the wedge. You're connecting the highs and the lows, and eventually it's forced out. When it gets to the head, it has to either break out or it has to either break down, right? One or the other. And so that's what we're really watching. Now, in general, if you look at pure probabilities, upsloping wedges tend to want to break down eventually. There's a slight higher percentage of that happening. When I say slight, we're not talking about huge. Maybe 60-40 kind of probabilities. So again, maybe slight favoring to the downside, but let's watch here. Now, if we get above, remember I taught you guys the confirmation signal yesterday, at least the basics of it. There's a little bit more in-depth stuff that I teach in my courses, but we want to see if it closes above this line, does it confirm on the daily chart? That is the end-all be-all versus a fake-out. Don't think, by the way, that institutions don't know this channel exists. And don't think they might not want to just get the last few shorts to get squeezed out by getting us just above this line and get the last few bulls on board and then think about reversing it. That stuff does happen. And as an investor, if you don't know these games, then you literally get eaten. It's like shark-infested waters, and you are one of the small fish that are dinner for the institutions. Okay. Couple other things to go over here. Look at the RSI. This is something I did pick up on. I don't know how many of you guys know RSI. This is, again, something that we teach here at Verified Investing. But when price goes up, generally the RSI should be going up as well. It should be making highs, higher highs, right? Just like the market, high, higher high, higher high. And even here yesterday, higher high. But look at what you have on this RSI. Let me get rid of those lines. You have over here, this was a high, and this was a high. But then you made a higher high here, but a lower high on the RSI. And even yesterday, look at this. You didn't even get back to the 70% level of RSI, and you made a new high on that. That is called a negative divergence. And I used this in Bitcoin going into the spot ETF. This was a clear signal for my short where we made money on that drop with members of Verified Investing Crypto. And I've used this in many cases. Now, is it infallible? No. It can fail, of course, but it does give you a little bit of an edge. And in this game of investing, edges are everything. You just got to get those probabilities in your favor on every single trade. Of course, it doesn't mean every single trade is a winner, but nonetheless, it is important to get them there so that more often than not, you are winning. Going quickly to a couple other charts here, guys. Apple continues to be holding this major line. I'll tell you, I got to give credit to Apple. Now, listen, it's partially the market and Nvidia, right? I mean, Nvidia now has become the market, but Apple just does not want to give up this level here, right? And what I mean by that is you have a very clear trend line that we've talked about, and it's hitting over and over, and you even pierced it, right? I mean, I think you're seeing the steps of this. It almost reminds me of my child, or children, or anyone's children. They push you to the limit, and then they push you a little bit more to see how far they can go. And here, you had it starting down here. It hit perfectly right here. It hit perfectly right here. Now it went a little over the line and then got rescued right back up. The point is eventually this falls off a cliff, or at least it should. So watch that closely, especially as we're seeing Apple underperforming. Even though Apple's still a great company, basically $3 trillion company, remember, the last time Apple made a new all-time high was December of 2023. And since then, it's been underperforming while the NASDAQ 100 has made new all-time highs. So this is no longer the favored leader. We know Nvidia obviously is that name. Speaking of Nvidia, guys, this is a crazy one. So I had that channel, and we talked about how, again, you know, the channel here was just blown right through. But what I want to see today is, does it confirm? And secondly, you have other lines right up in this range as well. It's above all these lines. So really, as a technician, when a chart goes vertical like this and you start to run out of trend lines of resistance. Now, it doesn't mean it's going to continue to go up. You just have to be aware that that's just the nature of the beast. In bubbles, things will do that. They will just go to infinity, not infinity, but they'll just keep going and going. The one thing I want to point out to you guys here that did catch my attention is that if you look at this chart here, right, let's zoom in a little bit, look at that RSI again, right? In fact, I'm going to clean off all these lines on the chart so we can see. Now, let's just do a quick test for you guys at home watching or wherever you're watching. All right, here's a high, here's a higher high. What should the RSI be doing? It should be going up, right? You should have a high on the RSI here and another high here, and you should, you know, something like that, right? But look at this latest high on the RSI. Here's your previous high right here, and look, you're all the way down here. That, again, it's not, you know, I really like to see 3 negative divergences in a row, but it is something that I'm paying attention to. We'll have to see again. If Nvidia goes up for another 10 days straight, of course, eventually that RSI probably does take it out. But it's just something we want to pay attention to. Because if this comes down like this, and it comes and then makes a new high here on price, but this makes a lower high, now you have 3 points, which to me on the RSI becomes much more important. Like I said, I've used this on multiple charts, including on that Bitcoin spot ETF approval to get another signal that it was going to dump out, and it did fall 20% in that scenario. Couple other charts here, guys. I want to jump to booking holdings. So again, if we look at booking holdings here, we can see it is down in the pre-market. We talked about this one. Again, it wasn't that they said travel was that weak. It was just, again, there were some other tax implications. But either way, the kicker is this, right? So it's trading at around $3,656. Amazing they haven't announced a split or anything like that. But just look at this stock from alone what it's done since November of last year. So we're talking basically, what, 4 months? So if we look at this, going into earnings, the stock had gained 43%. So think about this. Just again, now Nvidia was the freak of nature, right? I mean, that stock, again, defied the logic of this. But if you look at 100 stocks that rally 40 to 60 to 80 to 100% into earnings, a majority, not every one of them, but a majority of them will fall. Booking holdings is a good example of that, right? They beat earnings, they did well. Yeah, there were some tax implications that caused them to kind of show some lesser earnings than maybe people expected. But when you look at this gain, there are people that say, okay, this is now run. This has grown into its current valuation, if not a little expensive based on what they announced. And you do see a pullback on the charts, right? So again, you're now seeing this thing pull back to the 3,600 level. Now, in all fairness, that's just right back to where it was trading right over here, which is a lot of support. Now, on a technical basis, is there a trade here? I mean, this is tricky, right? I mean, you have this huge gain. The levels that I would be watching would be this low here, right? Which looks like it's just below 3,400 right in there, so 3,400. And then if it really flushed through that, this is going to be major, major support. Look at how price went up, and you had all this chop here. That's going to be major support, and that, again, looks to be around 31, 31.50 on the booking holdings chart. Okay, couple other charts in the motion today. Let's bring up Mercado Libre here. This one, again, is getting hit. Kind of the same thought process as booking holdings, right? Look at the run up in this. This thing is up from $1,100 to almost, I mean, basically you're almost talking about 100% move in the stock going into earnings. It is seeing a little bit of selling. Now, it did have a little bit of a bullish pattern here, but one of the tips that I'll give you guys in terms of education is that when you see a bull flag developing at the highs, you have to be a little bit more skeptical of it versus when it's at the lows. And the reason it is because bull flags at the highs like this, and this consolidation is bullish, they have a higher failure rate than a bull flag that might appear down here. Why is that? Well, psychologically, the chart, if it's discounted, it has lower expectations, and those bullish patterns will have a favorable chance of playing out. When you're up here, it's mile-high expectations. Again, if I zoom out on this chart, I mean, let's just even zoom out a little bit more. I mean, look at the run that this thing has had. Right, so you're talking about just going back to 2022, a couple years ago, and this thing has gone up 300% off of those levels. So just be aware of that. Little tidbits like that do make a difference. Now, Square, real quick, guys. Square is hitting new highs in the pre-market. Look at this move on Square, guys. And again, remember, this is one that was somewhat beaten down. So we're trading at $80 or just above. Let's look at our tradable levels for the day real quick. Then we'll get into some commodities. I was going to talk about Carvana, but Carvana's a short squeeze. I'm not going to really mess with it. But again, if we zoom out, let's go to the weekly chart on Square. All right, look at this. Does that look like a chart that was at all-time highs? Like a Mercado Libre or the other one, or Booking Holdings? Or is it down here? All right, so you have to just kind of keep it in perspective. Now, it doesn't mean, just because, I want to be clear on this, just because it's at the lows doesn't mean it's a buy going into earnings. It's just a slight probability change. It favors a little bit of upside when assuming, by the way, this is all assuming that you don't have issues within the company like bankruptcy and other things like that, right? But if it's a healthy company that's just been discounted, the favorable factor is to the upside. So sure enough, this is trading north of $80 after that big collapse on the daily chart. Now, if we zoom in on this, where are our levels? Well, interestingly enough, we are trading right at this technical level right here, which is resistance. Would I short it? No way. No way. Not on a chart that's been beaten down like I just showed you. Now, if it really surges up, you'll have a secondary level right up here, which looks right around there as well. That would be around 92 to 93. Now, if this stock got to 92 or 93 today, would I take a day trade short on it? Yes. Not a swing trade. Maybe a quick scalping opportunity for a day trade. All right, guys, follow me over to this screen. I want to go over a couple other charts here. So, of course, we're going to get into Bitcoin and see what we have on the Bitcoin chart real quick. So let's flip that over there. And right here, we have Bitcoin again, which honestly, I'm surprised about, right? If you had told me Nvidia was going to soar like it did and the stock market was going to have one of its best days in years, I literally would have said, well, man, Bitcoin will be up $2,000 at minimum. It wasn't. It was down. So something's going on there, guys. Again, something is going on in this situation. Now, again, is it still safe? Is Bitcoin still safe? Yes, because it's still above 49,000, which was that spot ETF high. That's your level. But again, why is it not seeing money flow from risk assets? I'm not 100% sure. Just being frank with you guys on this at this point. I am in the money on my short that I have with members. I just have a little bit of a short, but nonetheless, we are in the money, as I do think it will pull back below and head back down. One other thing I want to point out. Remember I told you just a little while ago about the negative divergence and how I knew, or at least it gave me probabilities of that move in Bitcoin to the downside. We'll take a look at the negative divergence here. Look at this. High, higher high here, higher high, right? Look at the negative divergence on these. Look at this. Look at that. As price was going up, look at the negative. Even when you got to this high, you couldn't even get back to the 70 marker on that chart. That negative divergence, and then what happens? 20% drop. Right? So again, do we have a negative divergence yet? No, not really, because you have to kind of, to me, I reset it. Once this plays out, I kind of reset. But if Bitcoin, let's say, falls to 49 and then rallies back up and makes a new high back to this line, but RSI maybe comes down lower, that would start to get my attention in terms of RSI. And again, guys, hope you guys see that every time I do these, my goal is to bring you some sort of educational piece as well as the chart analysis. Okay, so watch 49,000 on Bitcoin. That's going to be the key factor here. Let's go quickly through Avalanche. Avalanche here, take a look. We could see that explosive move, which was just nuts. Look at how, again, you had resistance. It broke out. It came back right to the scene of the crime right here. broke down, and then it started this new channel right here. It went back to the scene of the crime again, then sold off, and we're right here. So you're kind of at support at $36.50 to 40 cents. Problem is, I think it probably does break lower. All right, now where would the levels be? Well, you're talking down here at around 28 if it breaks. So basically, if it breaks 36 to 36.50, you're probably headed to 28. There'll be some minor levels along the way, these little pivot lows here, but in general, that's a very plausible scenario if we start to see any sort of, again, bigger sell-off coming in on the altcoins. And again, guys, with stock markets at all-time highs, it is interesting, and by the way, it's interesting that we're not seeing the alts aside from Ethereum doing well, even with Bitcoin stalled out, because usually that's the playbook, right? Bitcoin runs like it did, and then Bitcoin goes sideways or pulls back a little bit. The altcoins run. We're not really seeing that, at least not on a lot of them, you know, not on Solana, not on some of these others. Speaking of it, which let's take a look at, this is Chainlink. I haven't gone over this one in a while with you guys. Let's do a little test case. I want you guys to look at this chart. Where do you think support's going to be? All right, well, it's already pulled back off of 21 back to below $18. Where's that big support line going to be? Give you guys just a second as I bring it up on my chart here, just test your knowledge. And basically what we do is we just put in a beautiful trend line right across, okay, and we can even lower it. There you go. All right, so hopefully some of you guys are able to get this when I do this. My goal is, again, to slowly teach you guys how to draw trend lines and understand levels. So what this is telling us is that this was resistance, 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 breakout. Where's the scene of the crime? Scene of the crime, the breakout level here, right here. That's your support level on Chainlink, right there. 1675, give or take. Now, if it gets below this and confirms, that would be very bearish. And where would you expect it to go? You'd expect it to go to the low end of that channel again. It would basically break back into the channel. The channel would be dominant again, and you would look for that action inside of that level. Okay, so good stuff there, guys. Let's move on here to a few other commodities. Not a whole lot to discuss on gold here. It hasn't moved a whole lot. So let's go to the bigger time frame. Let's erase all these trend lines and just kind of putting out there. I want to show you guys this again. This is something of importance. But basically, when you're looking at this sideways moves, what you can see is that gold essentially is in the same kind of pattern as it was here, right? Flat top, just like we have a flat top here, okay? And really, again, it had pullbacks. You can't really put a inverse. Well, maybe you could do the inverse head and shoulders here. I don't know, you know, something like that. But the point is, you're doing the same sort of thing, right? It keeps hammering. And the thought process behind what I'm thinking is that you're going to, once you get the breakout, you're going to get this type of replication of a move, which again would put us pretty nicely north of 2,500. Again, have we broken out on gold? The answer is no, we haven't yet, so maybe we don't. Maybe we never do. But I do think this will eventually happen, especially once risk off starts to hit the market. Silver's not doing much. This is a big chart of silver, but it is flagging here. Generally, this is a bullish flag. Again, it's the consolidation is occurring in the upper range, so keep that on your radar. Platinum, I promised you guys I would do palladium one day, platinum another day. We touched on palladium earlier this week. Here's your platinum chart. Platinum actually is interesting to me, and the reason it's interesting to me at these levels is because if we go here, right, if we look at this, we have a couple trend lines converging very close to price. Low, low to right through here, right? And where are we? Right there. And then you have this little pivot low right across here. And this is the monthly chart. So we're going back to 1999 for the start of this trend line. So again, assuming platinum holds this, we'll call it 880, 875 level, it looks actually pretty good here, but you still need the short-term breakout above 1,000. So again, support around 880, 875, but ultimately, if you want to see the big move, you got to get over 1,000. That's going to be the hump for this chart. All right, a couple other charts just to quickly go over, guys. U.S. oil, it is pulling back a little bit today here. So again, small pullback. All you care about here is $79. Does it have a daily close above? Does it confirm? If so, this is your trend line target. If it gets rejected and the bull flag fails, you easily could come back to $70 per barrel. And lastly, guys, real quick, here's our natural gas chart. I did want to show you guys just one thing here. So we talk about divergences, right? So here's your RSI. Here was your previous low. Here was your secondary low that we just got the bounce off of. RSI was down here. low here. So you had a positive or equal divergence right there, slight positive divergence on those two. With such a dramatic move lower, that's very, very bullish. Now, we are pulling back on nat gas today. You're seeing a little bit of a pullback again. But yesterday, this was happening as well, and we saw buyers step up. So let's watch to see how that trades out there. All right, guys. So that's really where we are at this point. Just follow me over here. But again, I hope you learned something as always, guys. Don't forget the silver bar giveaway. That's next Thursday, the last day of the month. And then we're going to start using that wheel right there going into March. We're going to fill it up with prizes and gold and silver and crypto and courses and all that fun stuff for you guys to win on a daily basis, actually. I'm committed to giving back. Again, it's called the Wheel of Appreciation. Thanks to you out there who came up with that name. I love that name. You guys have a great weekend. As always, thanks for being with me and spending time with me Monday through Friday. And I'm going to kick this, and let's hope I don't break a camera, but let's see what we can do here. There's Ben.